Good afternoon, everyone. The highly anticipated November CPI inflation reading just came out this morning, and it was a little bit uneventful in my opinion. The reason why I think it was uneventful is that inflation came in line with expectations on pretty much every metric. Year over year, November inflation came in at 3.1%, as economists expected. And then for core CPI, which is CPI minus volatile food and energy, that came in at a year-over-year increase of 4%. And then core CPI month over month came in at 0.3% as expected. And then CPI month over month was slightly hotter than estimated, coming in at an increase of 0.1% month over month compared to an estimate of being unchanged. Honestly, in my opinion, I think the market was starting to get a little bit ahead of itself, thinking that inflation would be a little bit lower than estimated. And I honestly thought that too. I thought we would have had CPI inflation year over year with a two handle, like a 2.9%. And then I also thought that core CPI year over year would be under 4%, like 3.9%. So the market was, before this report, was up a little bit more. Then the market dipped, and then as of midday, the markets in terms of the Dow, S&P 500, and NASDAQ are up a little bit. So that's good news. Looking under the hood of these numbers, the main reason inflation dropped slightly from 3.2% to 3.1% this month is that gasoline prices declined, as well as heating oil. So that helped. However, one thing that's really keeping inflation a little bit higher, especially for core CPI, for core inflation, is that shelter costs are still pretty high. But honestly, I'm taking that with a grain of salt because the shelter, the Fed shelter inflation and the metrics that the Fed looks at for shelter inflation are lagged. So I'm taking that a little bit with a grain of salt. Another bit of good news is that Treasury Secretary Janet Yellen said in an interview with the Wall Street Journal economics reporter Nick Tamiros, she reacted to the inflation data, saying that this shows that and it makes her pretty confident that inflation will continue to go to the Fed's 2% preferred inflation rate and increase the odds of a soft landing. And in my opinion, I think Jerome Powell will probably echo a lot of those claims and a lot of what Janet Yellen just said in the interview. 10-year Treasury yields are flat on this news and are now trading between 4.23 and 4.24%. Honestly, I think that's because inflation came in as expected, so 10-year Treasury yields didn't do much. And then lastly, I want to talk about what this means for the Federal Reserve, for the Federal Reserve's rate decision on Wednesday, tomorrow. I think that the Federal Reserve will pause rates in the meeting for this month. However, I think they might slowly take off the chance of rate cuts in the first quarter of next year. Right now, the market got a little bit ahead of itself, pricing that in, and I think Jerome Powell might want to take that off the table a little bit. And I think he'll still be balanced in his language, but I think he still wants to have language and pretty much says before they do any rate cuts, they want to make sure that inflation is closer to that 2% level. As a result of taking the possibility of rate cuts in Q1 off the table, that should likely push up 10-year Treasury bond yields up a little bit, which should do some of the tightening for the Fed in of itself. And that might push down the markets a little bit. But I think once the Fed meeting's over with tomorrow, that should likely set up the market for the rest of the year, for the next few weeks, to continue its Santa Claus rally into year end, in my opinion.